All right, everybody, special update. Market crash, market crash. I know a lot of you are cheering about this. So let's go over. Let's put this all in perspective. So the market is down. The S&P is down 13.5% from the highs in late September, October. 13.5%. Wow. The market is down. The S&P is down, what? A little over 3% for the year. The year's not over, by the way. It's down 3% for the year. Wow, my God, it's a crash. It's a depression. Folks, I was on the trading floor in October 1987 when the Dow Jones crashed 22% in one day. One day. We're talking about what? Not even a 2-month correction, 13%. Market down 3% for the year. That's a big deal, right? That is a big deal. Now think about that. Market, the S&P is down a little over 3% for the year. 3%. The low end of the single digits, 3%. The market is down 13.5% from all-time record highs. Don't forget, back in late September, early October, the S&P hit what? 2940. Now it's at 2540. Down 13%. Let's go over the numbers again. By the way, in 1929, in the Great Depression, the stock market dropped 85%. In the crash in 2008, 2009, the NASDAQ crashed something like 80%. In the dot-com crash, we had similar declines. So we're down 13% from all-time record highs in September, October. It's just a normal correction. We're down 3% for the year, a little over 3% for the year. I was on the trading floor in 1987 when the Dow crashed 22%. What would 22% be right now? 22% right now, where are we? 23,000 on the Dow, 24,000. That would be over 5,000 points in one day. So we went 500 points down today. Let me repeat. In 1987, I was on the trading floor. The Dow went down 22% in one day. That would be the equivalent of more than 5,000 points in one day. 5,000 Dow points in a single day would be the equivalent today of what happened in 1987. Did the world come to an end? Hey, we didn't even go into a recession following that crash. There was no recession. There wasn't even a hiccup in the economy. It just kept on going after that crash. Dow not only recovered everything, I don't even know where the S&P was at that time, like 200. So it's gone up tenfold in that period. More than tenfold in that period. So let me repeat, we're down 13% from all-time record highs. The Dow was, where was the high? Like 27,000 something. The S&P was at 2940. It's at 2540. We're down a little over 13% on the S&P. We're down 3% for the year, and the year's not over on the S&P. I was on the trading floor in 1987. The stock market crashed 22% in one day. That would be the equivalent of over 5,000 Dow points today going down. Got that? So I frankly, I don't know what the big deal is. I really don't know what the big deal is. Like, everyone's making a big deal out of this. Job market is strong. Bank credit is rising. Bank net worth. By the way, if you follow these metrics, which I do every single week, net worth, that is the wealth of banks. All-time record high. People are selling bank stocks. Government spending almost $5 trillion annually. China. Even now complying with a lot of U.S. demands on trade. They're buying oil. They're buying soybeans. And the points go on and on and on. We have a 2.5% interest rate. My God, I bought my first house In 1985, I paid 11.75%. It didn't stop me from buying a home. 11.75% on my mortgage. People bought houses. We got a 2.5% Fed funds rate right now. 2.25. It might go up to 2.5 on Wednesday. Probably will. But even that, maybe the Fed won't make a move. So I'll say it one more time. The S&P is down 13.4% from all-time record highs in September and October. 13.4%. I was on the floor of the exchange the day in 1987 when the stock market crashed 22%. That would be the equivalent of over 5,000 Dow points in a single day if that happened right now today. So over the course of the last 2 months, we've had a correction at 13.4%. And for the year thus far, the stock market is down. The S&P is down a little over 3%. 3%. Everybody's going crazy. It's a crash. It's a major bear market. It's this. It's that. It's a recession. It's a depression. It's the end of the world. It's tariffs. It's trade wars. 3% down for the year. 13.4% down from the all-time record high that nobody envisioned it would get that high. Those are facts. All right? So I'm calm, I'm collected, everything's good, nothing is extreme here, nothing is extreme. If you've been in the market as long as I have, this is nothing. This is nothing. Come and talk to me if it's down 80%. Come and talk to me if unemployment is up to 15, 20%. Come and talk to me if bank credit is shut off, if nobody could get a loan. Come and talk to me if the government goes into an austerity budget and starts running a surplus. Come and talk to me if those things happen. Right now, I mean, this is just par for the course. If you're in the market and you can't handle a 13% pullback from all-time historic record highs or a year where the stock market is down 3% for the year, and I understand that there are a lot of individual stocks that are down much more. Every stock has its own individual story. But you have to look at the overall market because that is reflective of basic conditions. Some industries may be faring better than others. That'll all get worked out. If you buy good companies and you hold on to them, and if you buy them at value, you're going to be okay over time. So one more time, I'll just repeat, the stock market is down 13.5% from all-time record highs in September and October. That's over a 2-month period. It's corrected some of the excess. So far, it's down about little over 3% for the year, but the year's not over. I was on the floor of the exchange the day in 1987 when the stock market dropped 22%, which would be the equivalent of over 5,000 Dow points in a single day. All right? So yeah, that's what it's all about. And by the way, that would be the equivalent of what? Over 500, almost 600 S&P points. 600 would be like 10 times the move down that we saw today in a single day. That's a big sell-off. This is nothing. Bye.